Well, we are past the 1 year mark of COVID. We're into the spring 2021. We're going to start having some interesting real estate stats going on comparing to where we're at now to last year. Hey everybody, Doug Reynolds here, your Sacramento area realtor. This is a monthly market video update I do for Sacramento real estate. I do it every single month for over a decade. I've been doing this. And this is for the end of April, beginning of May 2021. The stats for March just came out, so we're going to go over those. It's going to be interesting for the next couple of months here as we've got kind of a juxtaposition as to where the market is right now. We're in a pretty hot market. There's not a lot of inventory. There's a ton of buyer demand. Prices have been going up quite a bit lately. Compared to a year ago, it was just the beginning of COVID. Everything was really strange and wonky with the real estate market at that time. So it's gonna be interesting. Let's throw up the stats and we'll just kind of work our way through it. All right, listings published this month. So there was 1851 properties that came on the market, and that's pretty good news for everyone that's kind of screaming and crying and throwing a fit. There's no inventory. Well, a good amount of properties came on the market. Not a ton, but a pretty good number, and it was more than last month. It was 33% more than last month, and it was 5% more than this time last year. So a good number to see there. However, when we look at the active listing inventory, we're still under 1,000 available homes at this moment in time. So what that means is listings came on in March, but they got gobbled up real fast and went to pending, so they're not showing up as currently active listings, okay? So we only have 918 actives at the moment right now. That is up a little bit from this time last month, 9.4% higher, and it is down quite a bit. It's almost half than what we had. It's 44% less than what we had at this time last year. So that goes to show we've been talking about the market. It's been low inventory, high demand. That number right there shows a huge, way less available right now than this time last year. Let's look at the pendings. 1843 pending. That is up quite a bit from last month. It's up 18% from last month. And that goes back to what we just talked about. A bunch of new listings came on, but they got gobbled up quickly. And so therefore, our pendings is at a pretty high number. And it's even 23% higher than it was this time last year. Last year, that number probably would have been higher, but because of COVID, a lot of properties fell out of escrow at the beginning. In April, there was some wonky stuff going on. And so April was a little strange at that time. And then going all the way down to closed escrows, almost 1,300 closed escrows, 1,292 in March, and that was up 25% from February, so that was a good jump there, and it was up 10% from a year ago as well. So the pendings are heading higher, and the number of closed escrows is heading higher. I would expect that as we move forward for the next few months, we'll continue to see the inventory just a little bit higher, the pendings just a little bit higher, and the number of closed escrows just a little bit higher. But because it's low inventory and high demand, that means the price continues to go up. As you can see, the median is now at 481. That's a jump from last month, 4.6% jump last month. It went from 460 to 481. Let's look at year over year. It was a 400,000 a year ago. It's at to 481 now. That's a 20% increase in value. So really, this goes back to simple economics of supply and demand. The demand is really high and the supply is quite low. And when that happens, the pricing drags up. It goes up higher. Yes, I know there's a bunch of other nuances within it as far as inflation and interest rate and all kinds of other factors to be out there. But for just keeping it simple here, we're talking supply and demand. The supply has been low and the demand has been high. Think about when the market crashed in 2006, 7, 8, and 9. It was the exact opposite. There was tons of supply and hardly any demand. What happened? The prices dropped considerably. Well, now we're in the opposite. Low supply, high demand, the prices are going up. It's pretty simple. So what I expect is moving forward, still, we're going to probably continue to see a good amount of homes coming on the market, but they're probably going to continue to get gobbled up and turn into pendings pretty quickly. So our active inventory is probably going to stay pretty low, but at the same time, the pendings are probably going to be increasing, which means more and more people are getting into escrow and getting into properties. Just overall, there's not a ton available. If we look at months worth of inventory, we're under a month. So pretty low inventory moving forward. Once again, wild card, interest rates is going to be the wild card. If those jump up, demand's going to diminish a bit. Things will balance out a little bit, but if they stay where they're at, we'll probably continue to have more of what we've got here. Another wild card is Prop 19. Check out the video that I did on Prop 19, and you can see how that might affect California real estate a little bit. We might have a little bit more inventory, a little bit more sales going on because of that. Check out that video. Hope this was helpful. If you're looking to buy or sell in Sacramento real estate, feel free to give me a call. My website is realestatewithdoug.com. I look forward to talking to you soon, and clear skies.